Well, good morning, West Coast, and good afternoon to everyone else. My name is Brad Etheridge. I'm the Chief Marketing Officer for the Center for Tax Strategies and Resources. We are so incredibly happy that you're here today, and I'm sure by the time this is over, you're going to feel the same way. For those of you that don't know much about the Center, it is a membership-based organization. We're not an IMO or a PPO. You don't change broker-dealers to come with us. We are about education. We are about writing better cases. We lead with taxes, which is a very, very popular thing to do with all the changes that are going on in the economy, including increase in inflation. We have resources that our members can access that help you to create phenomenal solutions for your clients. We become kind of the place to go to where you can call up and say, hey, I've got a guy or I've got a gal, here's their situation, pick up new ideas, new concepts, and help in generating larger and more efficient and elegant solutions for your clients. We're going to tell you a little bit later about an event we have coming up here pretty quick in Vegas, where we're bringing in, what is it, stuff, 17 subject matter experts? Is it 16?
It's 18. I think it's 18.
18 subject matter experts, including tax attorneys and specialists in all areas of your practice. People apply to become a member of the Center for one reason. Again, we will increase practice revenue, but on top of it, we come up with ideas and concepts that can really open up your marketing, and we have marketing and lead source and know what to do with those leads once we get them. But I don't want to jump too far ahead into that because it sounds like I'm selling. I'm just a little excited. I'm really excited because I get to introduce our main speaker. Simon Singer is the founder of the Center for Tax Strategies and Resources. For those of you that don't know him, he's been successfully in this business since 1966, takes calls constantly. There's another one, client just calling in trying to buy something from him. He's written 2 or 3 business bestsellers. He answers his own phone calls, which I think is awesome. He is a nationally sought after speaker and a member of some very prestigious organizations like Advisors in Philanthropy, and is the past president of the Forum 400. I don't want to go too much further because I'm stealing time from Simon on this super hot topic. And with that, Simon, I'm going to turn it over to you.
Thank you, Brad. What we're going to do today, and what I get a real kick out of, and the reason we started the center, was I just think that the industry has fallen down badly with regard to initial training, ongoing training, mentoring. When I started in this business at the end of 1966, it was all over the place. It does not exist any longer. So I'm going to give you an example of that today. And let me start by, it's not moving, babe. Okay, thank you. I'm going to start by showing you a little bit about, it's not moving.
You're going to move your picture off to the side, and then you'll be able to advance.
Give me a second, guys, because I'm mechanically disadvantaged. All I did was make it larger. This is an example of lack of training. Mine. So here's the industry process. This is the level of training that we get. You get a lead, and everybody thinks, oh, if I just got more leads, I could be a great salesman. I'm going to share with you the inside stuff with regard to what most people in this industry do and what the real high-level producers do. So you get the lead, hopefully you get an appointment, you ask a few questions, then you go for the close. Then you answer objections, then you make the sale, then you're asking for referrals. Service is kind of an old hat word because the renewal commissions aren't very much, and it's really difficult to afford to really service a client as they should be able to be serviced. And that's where your next sales would come from. And then they say, if you repeat this, you're going to prosper. That's what the industry teaches, but there is so much more. Now, we're not going to spend a lot of time on this because we don't have the time, because each of these subject lines are going to be a seminar in and of themselves. But this is how the top of the table and the Forum 400 members do it. There's marketing for attraction. Then there's setting the stage, receiving the lead, the opening. How do you open the appointment? The questioning for information, showing interest, and then actively listen, and then more importantly, re-question them. Referencing your resources. We'll talk a little bit about that in a few minutes because most of you don't have much in the way of resources. It creates a level of differentiation, the likes of which our industry has never seen. How to build the relationship, which creates trust, finding the pay points, but not being too anxious to give out the solutions, strategies, or products. Don't whip out a proposal. You're just halfway there. You need to gather detailed goals and objectives and have husband and wife fill them out separately, and then get inside the goals and objectives and ask even more questions. Obtain referral and permission to meet with their existing advisors. It builds trust, it builds confidence, and it creates a level of credibility that you've probably never dreamed of, because like I did when I was in this business for the first 20 years, I wanted to avoid the professional advisor like the plague because they were always going to kill my deal. Well, there is a way to work with them. Finding out what the advisors know, what they don't know, what they like and what they don't like. Review the goals and objectives of your mutual client with the professional advisor and find out what the professional thinks you ought to do. Then you can provide the professional advisor with some alternatives, get their responses. What you're trying to do is you're trying to create a strategic planning team. Share our resources, which Brad will share with you later. It's tax attorneys, CPAs, major producers. It's almost beyond description, but share the resources, because I once again want to appear like I'm part of an organization that is much bigger than just me or a particular insurance company. Come to a meeting of the minds with the professional advisor and the client. Then and only then do you assist the client to close themselves. Because if you do all of this in really efficient form, they will close themselves. They will ask you things like, why wouldn't I do this? Or how do we get started? It's a very, very different. It sounds like it's tedious, and to be quite frank, it is, but it's also tedious waiting for people to answer the phone and waiting them to go take a medical exam and waiting them to give you the names of the doctors and the dentists who they've seen that you have to create APSs with. It's much different, takes a little bit more time at the beginning, but accelerates the time from there on in. Okay, now let's look at some cases using what we call the CTSR professional process. You can call it anything you want. It's really kind of interesting. Here's case study number 1. This is my case. This is what we call the ophthalmologist, because that's what he was. Here's a 40,000-foot view. The ophthalmologist was an acquaintance of mine. He initially was complaining to me about saving for retirement. He had a know-it-all CPA that was really tedious to try to work through. He thought he knew everything. Every step along the way was a battle. This presentation is going to go through the sales, the results that the doctor had because of our interaction. And here were the overall goals and objectives. Reduce current income taxes. He had a profit sharing plan, but he had discretionary income of another $400,000. When I talked to the CPA about setting up a defined benefit plan, literally, this guy had over 1,000 doctors as clients, and he was telling me that professional practices can't have defined benefit plans. It was ridiculous. Protect assets and the claims of judgment creditors. There isn't anything on the face of the earth that's better than the asset protection of an ERISA plan. Fund for retirement. Purchase a vacation home for $400,000. That was in Lake Tahoe. Protect his family in the event of death or disability. Music to our ears. So here were the strategies we used. We created a defined benefit pension plan, but I had to go to his estate planning attorney to get agreement with the fact that they could do a defined benefit plan to offset the CPA. Have the corporation implement a split dollar plan. We're doing that in order to try to take advantage of the C corporation tax, which at the time was 15%, and then the state tax was another 6%. So it was 21% overall, as opposed to a 45 and even a 50% taxation in California, which is where we were. Have the corporation purchase a disability policy, again, to being able to deduct the premium. Here were the results of the defined benefit pension plan. So for funding for retirement, he was currently funding at the level of $30,000 per year for a profit sharing plan. We increased that to $200,000 for 10 years, resulting in an additional $85,000 annually of tax savings. Times 10 years, that's $850,000. Retirement plan accumulated $3 million. We converted the defined benefit plan to a profit sharing plan when he reached the present value of the accrued benefit. Now, if you're doing cash balance plans in today's world, they don't have accrued benefits, but you still would want to move to a profit sharing plan for a couple of reasons. Flexibility is one of them, and options that we're going to discuss in a minute is a second one. $500,000 of the profit sharing plan was rolled into a Roth IRA because he had become disabled and he didn't have anywhere near as much income. And so 500,000 was rolled to a Roth. And then we moved another $2.5 million into a profit sharing plan because in the law, it allows for tax-free disability distributions for somebody that is totally disabled. Now, the total disability requires basically the Social Security definition. He was not that disabled. Back to his tax attorney. Can you do this? He says, I do them all the time. So the CPA wouldn't even sign the tax return. He had to go to another CPA that we introduced him to. But now I created, I enhanced an adversarial relationship with the CPA, never got a single piece of business from him again, but created a much deeper relationship with the tax attorney, who also happened to know some CPAs who would also talk very positively about me. So the balance went into a profit sharing plan, $2.5 million, income tax free, 500,000 of profit sharing plan rolled to a Roth, 3 million income tax free. Here were the results for protecting the family. The Doctors Corporation purchased his own occupation disability policy, and he became disabled, not being able to do surgery any longer, which was the definition. And it was originally purchased with an accident as the cause, hurt himself skiing. We'll come to that in a second. The doctor became disabled due to an accident, was unable to perform his operations at age 55. So we filed the claim, collected from the disability company. At age 65, the disability company stopped making disability payment as they reclassified the disability as a sickness instead of an accident. Recommended an attorney who specializes in disability lawsuits. He filed the lawsuit. The disability company settled for all back payments, all future payments for life, plus 50% in punitive damages after the attorney's fees. Not a bad result. I can't say that's necessarily a result of our planning, but it is a result of the way we drafted the policy. Here were the results for asset protection. Protected a significant portion of his assets from the claims of judgment creditors by implementing an ERISA protected defined benefit plan. If you think O.J. Simpson, with $33 million civil judgment against him by the Goldmans can't touch one nickel of O.J.'s two defined benefit plans. One when he was a football player and one when he was an actor. Two defined benefit plans. They couldn't take the distributions either. He was able to buy a vacation home. By implementing the split dollar plan, the doctor was able to make the purchase and remodel it, $400,000 for the lake house, using some of the cash value on the split dollar policy. This all gets down to in-depth discovery, finding out not just the financial stuff that the individual wants to accomplish, but finding the intangible stuff. He very much wanted that house. Where's he going to get the money if he's taken care of all these other things? Maintain and utilize the property for the past 35 years. Has recently sold the policy. It's appreciated to $3.5 million. So I can't take credit for the 3.5, but I can take credit for using two uses, taking care of the family in the event of death, paying for the premiums with a lower tax rate in the C corporation than he would have if you tried to do it personally, and then borrowing $400,000 against the policy and using it to purchase the lake house and do some remodeling. Here were some additional strategies and resources that we used. The profit sharing plan, $2 million tax-free disability distribution. We talked about that. The Roth conversion was $1 million. Referred to an attorney specializing in insurance company abusive handling of disability claims. What am I missing? Here's a recap of the tax savings, because if you don't keep score, the professional advisor and the clients don't keep score. Total tax savings. Defined benefit additional tax saving of $85,000 for 10 years, that's $850,000. The split dollar plan, annual tax saving was $30,000 because of the differential between a personal tax bracket and a corporate tax bracket. 30,000 times 5 years is 150,000 of tax savings. The distribution from the profit sharing and the Roth conversions, $1,500,000 over and above what would happen if he just took the money himself, because he would have paid that $1.5 million. Grand total of tax savings, $2,500,000. Case study number 2, and if anybody has any questions, you can raise your hand, but here's case study number 2. This is a surgeon this is really kind of interesting because the background is very, very interesting indeed, because it came from a referral from a tax attorney. The tax attorney got a prospective client to call him from an internet lead that he had received. And the conversation went, he's located in California, conversation was he wanted to make more contributions to his existing defined benefit plan, but was told it was maxed out. So knowing that we've got a certain level of expertise, or actually our resources have a certain level of expertise, he called us on the telephone, and the doctor called me straight out and said, this tax attorney told me that you can help me with my problem. So we worked with the surgeon's third-party administrator and other third-party administrators to determine if additional accumulations, I'm not sure why it's there twice, it should have been accumulation and contribution, and it turned out that there was room. Reached out and met with the surgeon's CPA. Before we implemented, met with the surgeon's CPA to discuss his thoughts and my thoughts for the surgeon. CPA explored our recommendations. Here were the results. The surgeon was able to contribute an additional $2 million over the first 2.5 years. Now, trust me, this is a stranger calling me cold, well, almost cold, because the referral was from a tax attorney, but I spent the time at the beginning to not hide from the CPA, to let the CPA know that I wanted him part of that strategic planning team, because over the years, not for the first 20, but for the last 35, I figured out that the reason they were killing my deals before is because I either didn't know what I was talking about, or I lectured them as opposed to counseled with them and tried to make them part of a strategic planning team. Does it always work? No, it doesn't, as evidenced by the first one with the ophthalmologist. But it works a significant portion of the time. The reason they say no or be careful is because nobody takes the time to go over the facts and circumstances, go over the goals and objectives, and ask them to participate. So over the first 2 years, $2.5 million of additional contribution. The new TPA was engaged in order to increase the contribution, increase the accumulation, add life insurance. It was a $92,000 premium. Partial exit strategy from the retirement plan based on life insurance and valuation discounts. Created a tax deduction that would not have been there for the surgeon if we hadn't been called into play. Nothing that independently all of you couldn't do, except it never would have happened if I didn't have the positive nod from the tax attorney and the positive nod from the CPA. How in the world can this life insurance guy possibly come along and tell me that he can get me another $2.5 million of tax deduction? How is that possible? Tax attorney and the CPA both were thrilled with the results. The plan was implemented. Then the surgeon, who was excited, says to me, but I need more than a $2.5 million deduction. I said to him, do you want more deductions or do you want more tax savings? I explained the difference between, in the state of California today, state and federal, it's a 29% tax rate for a C Corp, and it's a 51% tax rate for a personal asset, personal tax return, or even an S corporation. And so there was a 22% positive arbitrage, meaning for every $100,000 that was run through the C corporation, the doctor saved $21,000 in taxes. And it turned out we did a lot more than that. So I suggested the possibility of creating a non-medical management corporation to provide management services for his professional corporation. 21% positive arbitrage between the C and the S corp. The idea came to me from a presentations made by one of our resources at our academy meeting. By the way, the same attorney that referred me to him to begin with to try to improve his pension plan, but had not been engaged, so didn't come up with the idea of the C Corp, which in fact was his, not mine. He liked the idea, but he wanted me to explore with the tax attorneys and the CPA. So the tax attorney CPA went over the process, what needed to be done. The C corporation was created and enters into a management services agreement. This was the discussion. The agreement was based on a percentage of gross revenues. Utilizing net revenue would be splitting professional fees. That's not allowed. New management company performs services such as rent, billing, accounts receivable, salaries to non-professional employees, basically all non-medical tasks. Prior to 1988, professional corporations went to a flat tax, which was the maximum tax rate, as opposed to a graduated rate, and most medical corporations became S corporations at that time. So here were the next steps. And by the way, I was when I started getting the approval, the doctor still wanted confirmation. So I was in Las Vegas, meeting with a client. The CPA was in North Los Angeles County, and the tax attorney was making a speech in Orange County, and the client was in Orange County. So I arranged for this meeting to be held at the airport in Orange County. I flew down from Las Vegas. The doctor drove in from his practice. The tax attorney went from where he was speaking at 6 o'clock. We met. There was about an hour and a half meeting, which we'll get into in a second. And lo and behold, he said, let's do it. So it came out to 22%. The money paid to the C corporation came out to 22% of the surgeon's gross revenue. In addition, there was another 38% of the revenue to pay medical related expenses and his comp, leaving 40% to be paid to the non-medical C corp. Went back to the CPA and attorney, reviews the strategy and the process, discussed the cost benefit ratio. CPA is intrigued. Schedule an appointment between the tax attorney, the surgeon, and me. Meeting took an hour and a half. Surgeon agreed to move forward. I'm repeating myself. I apologize, but I'm old. Call scheduled between the tax attorney, the CPA, and myself to discuss the strategy, the logistics, and the responsibilities, so that all the planning team was on the same page. You see, not keeping everybody on the same page is where things go awry. All the CPA has to say is, well, I'm not really sure about that. We're dead in the water, let alone if he says, no, you can't do that. It's illegal, it's immoral, and it's unethical. So the C corporation problems, retained earnings. There's got to be a reasonable corporate purpose for keeping more than $250,000 on the balance sheet. Reasonable business purpose, well, there we go, for retained earnings. There's a potential for double taxation. That's why the CPA almost always goes to a flow-through entity, an LLC or an S corporation or a partnership. Here were the results. The discussion of loan-based split dollar and or private retirement trust, which is a legal entity under California law. Split dollar codified in 2003. See, all that's happening here, and I don't want to sound like a smartass. I'm just telling you that I used to screw up with a professional advisor all the time. And I'm giving you some clues as to possibly how you might modify the way you deal with professional advisors and clients. So split dollar was codified in 2003. Private retirement trust is protected from the claims of judgment creditors. It is not a deductible contribution. It's a non-deductible retirement plan covered by ERISA law. Tax savings come from a lower tax rate, not a deduction. Non-California states have other ways to accomplish the same thing. And here were the final results. Savings from the defined benefit plan. Year one, $500,000. These are tax savings. Year two, $250,000. Tax savings from the C Corp. Year 1 through 5, $220,000 on $1,100,000 that was transferred. Protected $6,500,000 from the claims of judgment creditors. Created a structure where approximately 25% of the retirement plan distributions were income tax free. Why? Because they have this non-qualified plan that we talked about on the previous slides. Private retirement trust, if fully funded, would produce approximately $300,000 per year net after taxes for life. So if any of this is of interest, but Brad, I'm going to let you take over here if you would, please, because I got to catch my breath.
Yeah, well, I look at this, and those two cases, by the way, I actually asked him to put those together for one reason. Those are super complicated, and I've been doing this 40 years and would not have known where to come up with those steps until I joined the center, until we put the center together and say, wait a minute, we've got the CPAs and the tax attorneys. Simon has the knowledge behind the scenes. We have structure. You can be a hero in front of your client, solve a lot of problems. So don't think that these are the only cases that members come to or that we do ourselves. This is an exceptional case, but just tells you if you have the right team together, you can come up with some phenomenally elegant solutions for the client.
And by the way, let me interrupt for a second. Don't get impatient because we've got another one right behind this that you'll find every bit as intriguing, and it has not yet been completed.
Yeah, it's right in the middle of the case, so it's kind of fun. Okay, so listen, here's what we do. We have these live events on a quarterly basis, and at the events, we bring in this case, we have 18 subject matter experts ranging from tax attorneys to how to protect your clients' personal information, because that's a pretty expensive fine if you don't, to increasing your discovery abilities to. And I'll go through some of the people that are going to be speaking here in a minute. But it is in Las Vegas. Is at the old Hilton Hotel, which is the Westgate, where Elvis used to play. It's a beautiful hotel. We've used it a few times. We really love it. Good food. It's May 11th through 13th from 8 a.m. until 5 p.m. on days 1 and 2, and then we run from 8 to 4 on day 3. We always give the times as approximate because we may run over a few minutes if the members have questions. This is a really unusual industry type meeting because it's not like anyone that I've ever been to. Nobody gets up until there's a break. Nobody wants to leave the room because the ideas are one after another. And I promise you, if you attend this, you come to the event, you're going to walk out with a list of people and things that you can do to increase your business tomorrow, and people that you want to go take these ideas and concepts to. And if you don't have enough of those prospects, we're also going to be talking about how you can have those prospects through a system we have available for the members. So to register, you can go to our website at www.yourctsr.com, and there's a tab right on the front that says upcoming events. Just click on that and it'll give you information about the event. I just called Robert Brown, Simon, one of our operating officers, and he said, I've got 7 seats left. So we've got some really good hotel block pricing, and we still do have seats available for you. So jump on this thing. If you register between midnight tomorrow, if you register before midnight tomorrow, which is the 15th, that's a semi-famous date, members can get on board for $599 because members get in a lot cheaper than non-members. And for the general public, it's $799. For $799, you are going to, if you don't walk out of there with a few $100,000 of practice revenue increase, it's because you're not taking notes or paying attention. More information, you can give us a call at 877-258-2837. We'll put this up again at the end of the program. Or you can email us at thecenterteam@yourctsr.com. I see some folks. Go ahead and click that next page for me a minute. I think I've got it. Yeah, here's some of the folks that are going to be speaking at the Academy. Harlan Nicola, national expert in reverse mortgages, show you ideas on how you can free up money for your clients to solve other product needs. Paul Cella is a disability insurance specialist, and not one of my strengths, but I all of a sudden watched what he was doing and how he was doing and how he was opening up huge cases. The guy has just an unbelievable program he put together, so he's going to share that with everybody. Walt Dallas is a tax attorney who does tax reduction plans. By the way, all of our members have this service available to them automatically. They can turn in 2 years of their clients' personal and corporate returns, and within a few days have an analysis on how many things their current counsel missed, because this firm specializes in nothing but that. So it's a wonderful way. I turned a term insurance sale into a $55,000 target, and the IRS paid for it. Brian Edelman is going to talk about cybersecurity. The last time we had him speak, there was jaws dropping and hitting the desks because he's talking about how easy it is to hack. With everything going on with Ukraine and Russia right now, we know there's a heightened awareness. So he's going to come in and talk about how to protect your system and your client information. We'll also have Brad Etheridge, which is me, going to talk. I've done a little over 400 doctor seminars across the U.S., as well as quite a few other groups and car dealers. We're going to talk about some ideas and concepts that can increase your business. Brian Hampshire is an executive. He has an executive supplemental healthcare program that will open doors for you with corporate. You're going to love this thing. I hadn't seen anything like it. Simon found it, and we went, oh my God, this is perfect. Bruce Givner, one of the #1 tax attorneys in the U.S. We actually have 2 of the #1 tax attorneys at this program, but Bruce is unbelievably articulate and has wonderful ideas. If you have a client where they're in a situation where they need to reduce taxes, he's going to talk about things that I guarantee their CPA is not even aware of. Brad Hampshire is executive supplemental health care. Again, another sideline product that'll help you get into more companies. Rick J., a good friend of the center, member of, he does employee savings programs. Huge tax savings in these if it's the right kind of client. Rick's the guy to go to on it. So he'll kind of tell you where that market is. Kevin Jerry, he's got his master's in science and taxation. He spent 800 hours getting certified in tangible property tax methods. Just to give you just a quick overshot on that, What it is going back, let's say 10, 15, 20 years on your client's business, and things that they took depreciation on, they could have taken as a current deduction. He shows you how to capitalize those, and the IRS loves these. It's just there's only a handful of people that are certified across the U.S. to do it. You can free up $200,000, $400,000 of tax savings in a year for a client doing this, and it's amazing. I've got 2 of them I've got going with him right now with my clients. And let's see, who else have we got? Go ahead and click for me. Not that that's not enough. Oh, Patrick Kelly, those of you that read anything in financial services have come across his name. He's a tax-free retirement marketing program. He will put annuity clients and actually clients for overall planning in your lap through a book deal he's put together that's available to the members, and the whole system is done for you. It's really cool, and it's the first time the members are going to see this. So we're going to have some fun, and Patrick's going to come and present it himself.
Well, Bradley, also the software that they put together as well.
Yeah, this software is really it's incredible. You know, if you're putting together numbers for a client, I won't go into the whole thing on it, but I can run in one push of a button 4 carriers illustrations, but I don't talk about the 30-page illustration. I'm talking about the 1 page that shows me a ledger. If they put in this much, here's what the death benefit would be. Here's what the income would be if they wanted to take out a loan from age 75 to 100. And I can spit 4 companies' key pages in front of me in less than 2 minutes. Really, really handy when you're building a case.
There's also another thing. You probably all know about the program Power of Zero. This pretty much replicates it, except with a noted author of many more books other than just one. But more importantly, the fee to play is a little bit less than $900, which includes over 100 of his books, and seminar material and PowerPoint material and email stuff. Power of Zero was about $8,000, so it's about 10% of the cost, and the benefit is obvious.
Excellent. Okay, then we've got Kevin Knebel, who's LinkedIn's most recommended business speaker. I don't care if this guy was talking about how to change a tire. I can watch him for 4 hours. He's animated. He has an amazing understanding of the buying process. He'll talk about the world's biggest Rolodex, which is LinkedIn, and how to deploy it in your practice. Simon, Todd, and I, and Bobby all hired him, and we became clients of his to expand our reach, and what he goes through is over the top, so you're gonna love it. We've got Alex Melikoff, who's a national annuity product specialist, will show you things about annuities you weren't aware of and how to shop for the best product for your client. Scott McHenry will talk about qualified and non-qualified plans. His expertise will identify things you did not or thought you knew but didn't know correctly about qualified plans and where your flexibility is. Don Quarty is an LTC specialist, something I never really knew much about until I started spending time with him, but the products that are out there today are completely different than what was out there even 5 years ago. And he'll show you how to add that layer onto your client sale that will make your client very happy. So you're gonna love what Don has to say.
By the way, I think you forgot that Alex has some very interesting marketing methodology and, more importantly, statistics.
Yeah.
So
yeah, he and Don are kind of our tag teamed on that one, which is perfect. So he'll show you how to mix it in. And by the way, and it also ties in with everything that Patrick Kelly's doing. So it's kind of a 1, 2, 3 punch on a complete marketing system for your practice. We've got Dr. Vicki Rackner, who is on our board of our other organization, the organization that we set up for working with physicians and doctors, which our members have access to. And so that's the Doctors Academy of Economics. She's going to bridge gaps and talk to you about how to get into the medical market. And she always has different ideas and concepts, and she'll even make phone calls with you and for you for your clients. Simon Singer, we've already talked about. We've got Darren Sugiyama, and he is a premium financing expert. How he does it is so unique in the market and so clear and so clean. So he's going to talk about how to actually do premium financing the right way. And I believe that, God, I was saying there's no way we didn't have Joe. Never have seen him on the bottom of any list in my entire life except this one. Amazing tax attorney out of San Diego. He has helped our members close some absolutely monster opportunities. More importantly, created some phenomenal phenomenal solutions for their clients. So he's going to talk to you about a couple of ideas that you did not know about. He's going to talk about some tax efficiencies and what to do with clients. And he's going to come to a thing we do on the second night of the program called Fireside, where a bunch of the experts come, you come into the room. It's very casual. And we're talking about your clients, your ideas, your concepts. You can hear what the other advisors are asking about. It's just such a fun session, and that'll be on night 2. One thing I forgot to mention, I'll just say this real quick. We're doing something really unusual because we're so happy to have everybody back together live. On the first night, on the 11th, we rented a private club across the street from the hotel. We've got a shuttle that'll take people back and forth, so if you're walking impaired, it's not a problem. They've got a monstrously beautiful pool. We're doing a event around the pool with a gourmet dinner, open bar, and then also some things just to kind of enable you to socialize a little bit more. So we've got some putting greens and some outdoor games that you can play. Very casual. Should be a beautiful night in Vegas on the weather forecast so far, and that will be on the first night, and that's included in your membership fee to attend the event. So it's included in the fee to attend the event. So you don't want to miss that. It's our welcome back to the real world. So with that, again, we'll put this back up at the end of the program. Join us in Vegas. And Simon, I'll take you on to the next page here.
Okay, so I call this turning the too busy CPA into an advocate. Once again, the internal workings of a case study. So the CPA referral to our member, doctor and his partner, it's a gay couple. They earn about $750,000 in salary for each of them. The CPA says they spend everything they make. He wants to reduce the taxes. They're already a C corporation. He needs to fund for retirement. They need insurance to protect the doctor dying and becoming disabled or long-term care, because his partner, who's the CEO, would not have any income if the partner hit the deck. Protect assets from future judgment creditors. Okay, that's what the assignment was. So the strategies that we decided we were going to try to use, I don't know how many of them are going to be successful yet, is a defined benefit plan. Well, that one's already set up. The life insurance is in underwriting, but I have no idea what the budget is. We're using loan-based split dollar, 29% as if they try to buy insurance themselves at a 50% rate. And the disability and LTC corporately paid. The disability has been approved. The LTC has not been approved as of right now. But this is the interesting part. And I'm going to see if I can make this a bit bigger so that I can read it. So this is from the member to the CPA. Remember, I want to include the professional advisor. I want to include whoever they're going to turn and ask opinions of after I leave the room. Think about that concept. I want to control who they talk to, what whoever they talk to is going to say, because I had my conversation with him in advance. So this says, Simon and I understand that we've been charged with the responsibility. Oh, I didn't make it bigger. Sorry, Simon and I understand that we've been charged with the responsibility of, where are you? Presenting the proper type and amount of life insurance for the client. And B, the purpose is to provide income if B predeceases client A, and supplemental income in the both A and B are alive, and long-term care if available. Below are the assumptions we use as a means of calculation. Now, let me tell you why I did this. It was just a couple of months ago. He's in the middle of tax season. He says, I trust you. He trusted our member. He doesn't know me from Adam. He said, I trust you to do the right thing. And I'm going, I can't be right. The CPA is going to have to interject some opinions. I want to control what those opinions are. I want to get his thoughts as to what I'm trying to do in advance. So I send him what we're trying to do. The lifestyle net after taxes, because they're California residents, $750,000 annual, $1.5 million, 50% tax, $750,000. The number of years, because one of them is 49 years old, is 50. Is that being overly conservative? The answer is probably yes. But we like to make mistakes being too conservative, and if we're wrong, they end up with too much money. Income tax rates of 50%, which in California is easy, an estate tax rate of 40%, funding period for 10 years because the client said he only planned on working 5 to 10 years. The earnings assumptions that we use net after taxes and fees was 3%. So that equates to about 1% fee for investments and about a 50% tax. So it's about 5.5%, 6% gross. The future value of $750,000 is not 437. I apologize. It's $37,500,000. The present value of that, oh, I see what I did. I didn't put the cap sign on. The present value of the 37 million is 20 million, plus or minus. So since you know them well and they've been clients of yours for 20 plus years, prior to presenting anything to the client A and B, we would like your opinion to see if we're on the right track. Thanks for your help in the matter. So I'm trying to eliminate the adversarial relationship between a CPA and some guy trying to sell his client something. I hope that makes some sense. So here's what happens next. The CPA responds as follows. Hi, member Simon. Thanks for being patient with us in our replies. It looks like you're being very conservative. I will go with 100 years as life expectancy. Income tax rates fed in California are probably a little high, but not sure that's important as it will result in forced savings. If the if the actual tax rate is lower, life insurance generally not taxable to the beneficiary, but other items of income mostly are. Estate tax is probably relevant unless they lower the limits. Well, they're automatically going to lower the limits. January 1st, 2026, we revert back to a $6 million lifetime exemption per person. They're married, so they got $12 million in 2026. And we're all reasonably certain that the current administration and Congress is going to try to do things before that because they have a 30 million heading to 33 million of national debt. He says, yes, these guys do earn a lot of money, but they are relatively low savings. I am doing my best on that with them, but I think they fear not earning the big dollars. Do not think that's going to happen, but I know how they think. Spend it now before you're gone, but we are making progress in the thought process. Does that sound like I have an adversary or an advocate? My belief is that the benefit will be greater since your assumptions are very conservative, which is okay by me. Hopefully they both will be approved for disability and long-term care as well. I am planning on putting their C Corp on extension to be sure we have all the information, give them the time to fund the pension and to work on cash flow issues. The good news is their personal taxes should be very close to being on target. We withheld a lot of their W-2s on their W-2s and did not give them any net payroll since they'd already taken so much in advances. Progress made on advances, but more to go. Hopefully I'm answering your questions. I would suggest just telling them the price of the premiums and the benefits without going to all the details. So I'm getting guidance if possible. Thanks, CPA number 1. Okay, next one. Okay, so this time I'm going to try to remember to do this. All right, another from the CPA in March of this year. Thanks, member and Simon. We're keeping up with the pace of tax season. In fact, we're somewhat ahead. As for client A and B, I recommend that you were very clear and precise with them. Definitely tell them your recommendations instead of giving them multiple choices. It will confuse them and frustrate them. Trust me on this one. Great guys, but singular focus is maximizing their client experiences and their bottom line. At a time of your convenience, I would like to know whether they have LTC, disability, and life insurance. Of course, the big expense of the pension funding needs to be answered. I'm hoping they are working with Aaron to be able to do that, and I will check with him, but please let me know if they have the insurances we've been discussing. I'm a big believer in all of them, but particularly long-term care. Thanks for being patient with me in tax season. At least so far, the season is not as bad as I thought, as it might be with the child credits, advance payments, third economic impact. Seems like most of our clients are over the AGI anyway, et cetera, et cetera, et cetera. So just a thought process. I'm hopeful that some of you said, you know, these guys do not have to be adversaries. They do not have to be an enemy. But if they're going to be an adversary and if they're going to be an enemy, tell me today. Don't wait for 3 months for the CPA, for the client to walk in with a proposal they're thinking of implementing the next day and have him say, no, I wouldn't do that. Do it now. I'll go talk to somebody else. Bradley, you got anything you want to add to this?
No, this one just killed me when I saw it because I had the whole thread sent to me of the conversations. And obviously, like we said, we had to take the names out of it. That is a live case. It's going on right now and it's moving. It is unbelievable to see a CPA, who, by the way, was very difficult to reach in the beginning, as Simon had mentioned, was too busy, it's tax time, so on and so forth. Once he was included properly in the process, he was telling Simon exactly how to close the client. Don't give him too many options. Don't try to, you're going to confuse them. Trust me on this. Here's the priorities. They'll understand, blah, blah, blah. I've never had a CPA telling me how to close their client, but that just happened with this, and it's all through proper approach. It really is.
It is.
Okay, so we had a couple of questions that came in. We'll get to those in a minute. Let me just, again, remind you, as now we have 5 seats left. So welcome to the 2 that just signed on for this thing. CTSR Live Academy in Las Vegas, the 11th through the 13th, 8 to 5, Wednesday and Thursday, and then 8 to 4 on Friday, which is day 3. To register, go ahead and go to the website, yourctsr.com, and click on the upcoming events tab. It'll give you all the information. And also, because there is still some rooms left in the room block, it will send you, once you register, it'll send you an automatic link to the hotel at our pricing. I think our pricing is like $126 or something a night. It was a really good $128. It's a really good price from the hotel.
I don't know, Todd, are you listening?
I'm pretty sure it was somewhere right around there. Okay. If you do this before the 15th, midnight tomorrow, we're still in mid pricing. So it's $5.99 for members, $7.99 for non-members. I dare say you're going to eat and drink that first night, probably 150 of it. So it makes it even more efficient to attend. We're gonna have a really, really good time.
Yeah, we're gonna pay for it one way or the other. So.
Well, what kills me is that we're all day on stage, ideas, concepts flying. It's just really super exciting. And then at night, if you've got the energy, and almost everybody does, there's things going on each night, and it's just a riot to be independent but not alone. You're out there with a bunch of other folks in your business. And then if you have specific questions from the subject matter experts, they're staying. They come to these events and they hang out and answer questions. So some of these folks you would never probably have access to if it wasn't through the resources of the center, and now they become part of your practice. They make you bigger.
Yeah, and by the way, they're not doing this to be gratuitous. We generate revenue for them. We generate revenue for them because when we get over our skis, we say we need to get a tax attorney. We need to get an expert in the ways to be able to get deductions out of real estate. We can't handle everything. I'm not that smart. What I am is I'm street smart, and I'm smart enough to know when I need to bring somebody else in, whether it be for technical ability or from credibility. If I'm talking to a CPA and I walk into that office, virtually anyway, I walk into that office sitting on a tax attorney's shoulders, trust me, I get a lot more credibility if I try to do it by myself.
Yeah, it's night and day different. Okay, a couple questions. First of all, Simon, Alan Porter said he wanted to say hi. So there's an
Good. Hi, Al. How are you?
He says he's doing just great. Richard Bell wanted to know if we have an example of a pro athlete. Well, we didn't on this webinar, but we do have pro athlete stories we've done too. So you can get in touch with the center if you want to see what one of those case studies look like. We'd be happy to talk to you about it. Travis Evans wants to know what's the cost to become a member. Great question, Travis. It's $495 a month. You do have to qualify, and there's a few hoops you have to go through. We want to make sure that all of our members could comfortably do business with other members. They don't have a lot of bad business skeletons in their closets. So we do a pretty good background check, but I can walk you through that and tell you how that works. For the $495, there's a huge list of services that you will use almost instantly for your practice. Just so you know, the center itself does not make money. The center itself covers operational expense. We're not a not-for-profit organization, but just based on the way we set it up, we like to pump the money back into the center to provide better benefits and services. One of those things we've done is create an amazing list of things that our members can purchase if they need them from vendors, and those prices are considerably less expensive than what you'd be able to go pick up on your own. So,
and we don't have a back end on that either.
Yeah, no, we said, look, we've got a bunch of members and we need member pricing, and it's been phenomenal. Some of the things that you can pick up that you wouldn't be able to get otherwise without spending a lot more money.
For instance, I think that the Platinum Plus program with Insmark, we've got about a 40% discount on what their street prices are on their website. It's stuff like that.
Yeah, pretty cool. And by the way, if you want to find out more about why somebody becomes a member, more importantly, why they stay a member once they get in, it's because we raise practice revenue, help you create larger cases, and give you resources that you otherwise wouldn't have on your own. So to find out how that can fit in your practice, if you come to the event, it doesn't matter if you come to the event and become a member or not. Usually about half the guests that come end up joining, somewhere right around that number. You come to this thing, you look at me at the end of day 2, come and find me. You can't miss me. I'm all over the place, as is Simon during the show. But if you feel at the end of day 2 that you just didn't get your money,
No, time out. End of day 1, not 2.
how
End of
about
day 1.
lunch day 2?
Come to you on day 2, turn in your materials, tell me you didn't get any value, we'll refund your investment for attending the seminar.
Hey, I did this before, Simon, at the end of the program, if you felt that way, and I've never had anybody take us up on that. Because
No, end of day 1.
you're going to love this thing. Come and check it out. If you have any questions, you want to find out more about membership, or if you have questions about the upcoming event, go to the center team at yourctsr.com, or if you prefer, you can give us a call at 877-258-2837. We'd love to be part of your long-term plan for your practice. Hope you have a wonderful balance of the year, and we'd be happy to help you make it even better.
Take care, guys. Hope to see you in person. Bye-bye.